Hello and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we are going to be taking a look at the stock market, magnificent seven stocks, and other leading indicators. So let's start off with fear and greed. And you can see on CNN, we are still in neutral, and on pie vesting over the course of the last year, we are in this uptrend, but now coming back down towards that neutral territory. So still in greed as of now. As far as crypto, did a video earlier. We're still high up into greed. Subscribe if you want to get any information on the crypto cycles and where I believe crypto prices could be going, as well as alt season. But going over to the S&P 500 right now, you can see that this last time I was looking for more of a breakdown to this 20-week moving average. You can see how the S&P hit it a couple times before, but just bounced off the 10, came up a little bit higher, and is coming back down. Now, today, one of the important stocks we're going to take a look at is NVIDIA, because the earnings reports, and that was supposed to have a big reaction. Looks like it's just chilling, just down a little bit. But if we zoom in on the daily to the S&P 500, you can see here that it does like this 50-day moving average, and occasionally comes down to the 100. The 100, it seems to like a lot. This was in November, all the way into last year. So if we are to curl down here and get under this 20-day moving average, then you could look for around that 5,800 level. But should this continue to be bullish, you can see that the S&P 500, since the great financial crisis, it's been in this upward channel, and the next two areas that would be targets would be around the 6,000 area, low to mid 6,000, and the peak somewhere around 7,000 if it gets there. As far as the VIX, the volatility index, still relatively low. It does look like it's gaining strength and momentum to the upside. But right now, the VIX is challenging those daily moving averages as resistance. So right now, VIX still good low volatility. This is one I've been most interested to look at today with y'all, and that is the percent of stocks above the 200-day average. And right now, it looks like it's still finding support on the 200-day moving average, and you can see that the percent is at around 57. So you would want to see this area hold. If it comes down further, it could have a low here at around 51%. Then there's also this trend line here in the 40s. So if it starts getting here, that might lead to some good dollar cost average opportunities in certain stocks, as well as when it gets to the 70 level or above, then you can expect a little bit of a pullback. Something to have in the back of your mind, this is the yield curve on inversion. When the Fed raises rates because inflation is hot and they want to cool inflation, you see the 10-year minus 2-year, you see this inversion happening where it goes under the zero line. It is uninverted. Now, when this was inverted not too long ago, it was one of the longest times in history that the yield curve was inverted. Okay, and the last few times when we've had uninversion, the bottoms of the market was about a year and a half to 2 years after. That's what I put the vertical red lines for. This one a little bit shorter. That was the COVID dump. So I do wonder, and I'll admit I'm not an expert on bonds and how it affects the markets in every which way, but what is important to know is that typically a couple of years after, you can see recessions and a sizable pullback. So I do wonder if, because the yield curve was inverted so long, that maybe the bottom will be even longer away. So just something I think about. As far as the unemployment rate, still at 4.1. So next month we'll see if that stays flat, goes down, because right now the Fed has been cutting rates. Let's move over to these charts. The Fed has been cutting rates, but they've been cutting by an average of 25 basis points. Yes, the first cut was 50, and you can say, okay, 50 is bad. When the Fed cuts large and fast, it's typically because there's something already broken in the market. But when they cut low and slow, then the markets can still go up for another year or so. So the Fed cut by 50 basis points, yes, in September. They didn't cut in October because they didn't meet in October. And then they just cut by 25 basis points. So if they're going to do that again in December and January, then they're just averaging 25 basis point cuts. And then when they pause, that might be when the markets take off. So I'll show you guys what happened in the dot-com bubble. Let's go. Oh, woo, woo, woo. let's go. Let's go back. So in the dot-com bubble, this you can see right here when the S&P 500 got down to the 100-week moving average. This was a local bottom. Now you may be asking, what's this red line for? The red line is when the Fed is first cutting rates. So you see those dates at the bottom: September 98, November of 2000. Going back over to here, you can see that when they were cutting by 25 basis points and they did that first cut, that the market actually kept going up, and it was in 2000, later in 2000, when the cuts were heavy, that it started to tank. So if we take a look at that as the, I believe it is U.S. interest rates, and we go back to 98, you can see right here when they first cut there, that was the local bottom, and then they paused and started raising rates. And as the Fed was doing that, the markets were melting up. So I am wondering if a similar scenario is going to play out, that the markets are steadily going up, and then when the Fed eventually pauses and then raises, it's going to start ripping, and then the Fed is really going to be in a mess of, what do they do? Do they keep raising rates? Does something break where they have to cut drastically? Do they end up dealing with things like stagflation? All stuff down the road. Yeah, don't worry today, but real things that could affect your wallets in the next couple of years or so. That would be pretty painful. So as far as the rate cycle or the market cycle concerning the rates, you can see here that after rate cuts start, if we are non-recessionary, at least for the next year, we'd be following the dark green line. And we have, even before there's the yen carry trade unwind, the stock market fell 10% in August. So it's been following this average to the T pretty much. As far as the PE ratios moving forward, once we start getting in this dark pink, I'm going to be talking about this more often. Now, this is warning territory, but here it'll be like, oh boy, maybe consider taking some profits, because then what that means, price to earnings ratio, is that stocks are becoming way overvalued and large money is going to be taking profits. So if you're already making great profits on certain stocks, maybe start thinking about, not telling you what to do, no financial advice, but start thinking about, where would you look at taking profits? Is your plan to hold out? Because if there is any sort of recession and some of these holdings you have drop by 40, 50%, are you going to be able to wait that out until it pumps again in 5, 10 years? Who knows? Some things to start planning for now, just in case. This is another chart that I think is going to be important to see if it follows through. And this is just seasonality of presidential elections. So you can see there's a presidential pump and an inauguration dump, and then markets go higher Q3, Q4. So if something like this were to happen, maybe the markets do go down sometime end of Q1 next year into Q2, summertime. That's not always been the greatest time lately, that the markets might just accumulate before having a final blast off later into next year. That's sort of in line what I'm thinking. Let's move down to the Mag 7 stocks. Now let's start off with the star of the show, and that's NVIDIA. So if we take a look at just what happened today, all right, you can see that just today it sold off. Let's get our measuring tool out here. Spiked up and then sold off about 3%, right, which is a big deal for a stock that's one of the top in the world at around 3.6 trillion, and then just came right back up. So NVIDIA, I wouldn't say did bad or anything as far as earnings go, but maybe we're going to see what the true damage is tomorrow. As far as the daily, we'll take a look at that. It has a daily buy signal, so got a nice bounce off the 20-day moving average, and maybe it's getting ready to just keep pushing higher. So I've talked about managing expectations with NVIDIA. I think it's a wonderful stock, a great stock, but something to consider is if you put in $10,000 of your hard-earned money right now, you would want to see this market cap double if you did want it to double, but this market cap would go from 3.6 trillion to 7.2 trillion. That is likely not going to happen even in a stupid bullish scenario. So my target for even the most stupid bullish scenario, if the S&P is getting the 7,000, would this being in the range of 4 to 5 trillion. So manage your expectations. I think the majority of the pump for these stocks has already happened. I was lucky enough to get this near the bottom, accumulate down here as it was making an uptrend. It made a 10x, but you can just take a look at this. The average from the bottom, it's already gone up like 964%. So do manage expectations. That's what it's done in the span of 2 years. Okay, so I did take profits somewhere back here, and I'm not looking back. But as far as buying right now, something at an all-time high, it's too rich for my blood, even though it's a really great stock. As far as Microsoft, coming back down to the 200-day moving average, so dollar cost average territory. Also has this fib right here. You can see it got support off of it a couple times at around 400. But if you love Microsoft and you're just looking for a stock to DCA into, I don't think this is a worse level. But again, 400 to this 50-week moving average at around 406. The 200 days pretty close to that. I think it's not the worst. And right now, just sort of getting these lower highs, lower lows underneath this fib here. So yes, if it does hit this level, again, maybe it'll go lower, and that's possible. But I do think this ain't the worst dollar cost average territory. But again, if you like Microsoft so much that you want a dollar cost average in now on a sell signal, maybe you want to wait for a buy signal. I don't know. What I like to say is if you're comfortable buying here, you need to love buying it here. And if not, then you shouldn't be buying it. So Microsoft's still at a decent value. As far as Apple, so this is the 1618 fib. I'll show you guys. I drew a Fibonacci retracement from the prior high to the low, and eventually got up to this 1618. And right now it is treating it as support, which is great. The next target for Apple at the 2618 is all the way up here at 281. So something to keep in mind if things get really stupid bullish. I would not be surprised to see Apple getting up to that 281 level. So just something to bear in mind. Again, the market cap's really big. It's probably not going to double by the end of this cycle. Maybe get to that 4 trillion mark or so. But I would look at some decent profit taking should it get up there. As far as Amazon, it was getting into all-time high territory, still coming up. We'll see if it can come back down to its former all-time high area, this gray line. But if Amazon does start moving up further, and this is a $2.13 trillion stock, the 1618 price target would be at around 255. So all these outside of Microsoft looking pretty bullish in an all-time high territory. The only one I would consider, if I liked it as far as right now, is Microsoft. As far as Google, you can see that Google had a good bounce off the 50-week moving average and its former all-time high, and it is still going up. So you can see the wicks forming somewhat of a ceiling there. Let's zoom in on the daily, see if we can see anything better. So this level here at about 182, you want to see it get above that 182. There's some confluence back here, and then challenge at 1618 at 193. The 2618, if it gets above that, 261. So that'd be pretty good for Google should it continue to stay bullish. Meta one we've been talking about where it just loves that 20-week moving average, and it got just above the 1618. Coming back down, a little weekly sell signal. What's going to happen with these 20-week moving averages? One's EMA, one's SMA, pretty sure. But if it can hang on to this 1618, get a good bounce, Meta is unbelievable as it sounds. I mean, this is a $1.4 trillion stock. It could possibly go up to the 2618 at 860. And I would be shocked if people weren't taking massive profits near and around there. So Meta still has some possible big time potential. So, anyways, oh, and we have Tesla. Sorry, Tesla, the last of the Mag 7 stocks. Maybe because I'm doing good on time, I'll look at a couple others I've been seeing people talk about. Tesla still in this upward channel, hanging on to the upper end of it. You can see here that this is a 786. So if it comes down, you want to see the 786 hold. If not, then we can take a look at other moving averages. It's a 20-day, but overall Tesla looking pretty bullish. 20-day coming up here. I would say that 306 area could be a good area for support for Tesla should it have some negativity. But overall, right now, staying at the upper end of this channel. A couple others I wanted to talk about with you guys. MicroStrategy. This is the who's the guy? Michael Saylor, guy who always talks about Bitcoin and there being no second best. But something I did here, drew a fib from the prior high in 21 to the low. And what do you know? The price got right up to, whoop, you can see it there. I'll have to zoom down here or scroll down. Got up to the 4236 at around 511. Let's zoom way in and see where it's at. So yeah, getting really close to that 510, and that's probably why there's profit taking here. I'm telling you guys, like, this is just me, not financial advice for you. But if you got MicroStrategy at all down here at around 25 or even under 40, and it's done a 10x, I think it'd be silly if within the span of a year or two doing a 10x that you don't have a plan for taking some profits, because you can see after the peak last time in crypto that this did eventually sell off. In that first peak, it ripped. Now, could MicroStrategy go even higher, 500 or something? Sure, we can add more fib extensions. Why not? But right now, this thing's ripping. So how much more steam it has, I think, part of that has to do with just crypto in general. But let's take a look here. See when this top is. It is early February of 21. Okay. Well, that's curious because the very top of Bitcoin was not in February 21. It was over here in April. So a couple months before that. But even that cycle top was later in November, the true top. So in February 21, early February, MicroStrategy, when it had that top, Bitcoin was over here. So it still had a little bit more room to run. So just something to keep in the back of your head if you are into MicroStrategy. Another hot stock that people have been talking about, I have some of this myself, and that's Palantir. And Palantir, getting close to that. It's the 1618 at around $70. So pretty close to that. Again, just this one's been ripping up. So was lucky enough to accumulate some down here, and yeah, it's doing pretty well. But right now, man, this guy's been ripping. And if Palantir, the $141 billion AI company, if it's able to get above 70, you see the 2618 is at around 110. Man, that'd be some pretty good returns. So already hitting some price targets fairly quickly. Anyways, guys, hope you enjoyed the video. All about stock market. I do think it's important to watch what the stock market's doing, how it's setting up, because oftentimes I know a lot of you guys are here for crypto, but it's important to know what the stock market's doing because it can be a leading indicator for what's happening in crypto. And if stocks are starting to roll over, do negative, but crypto is still hanging up there, that's kind of a warning sign for you to possibly be ready for some turns to the downside. So anyways, thank you guys for watching. Hope you have a wonderful day. Take care.